let me come to the global questions. World trade and global GDP has grown faster than it has in recent years. Can we expect that to continue in 2018?
Well, evolution of global trade is very complicated, and we did a chapter on that in our World Economic Outlook last year. To the extent that investment is recovering in many countries, that's going to be good for trade. But there are trends that are reducing the growth rate of world trade compared to the past. For example, global value chains may have reached their maximum extent and may even be retracting in some cases. So that's not necessarily a bad thing, but it's hard to predict that trade will grow as quickly relative to GDP as it did in the past when these global value chains were being constructed. To the extent that the growth in trade slows because of trade restrictions, that is a bad thing. And we've seen some creeping upward in trade restrictions globally, but nothing so dramatic that it explains the majority of what we've seen so far.
So what would your estimates for global GDP growth be next year?
For the moment, we're looking at at or above the global growth rate, but going forward, probably more or less in sync.
Okay. I'm asking you because we have not seen so much by way of global growth so as to justify the kind of asset price rise that we have seen. Do the asset markets worry the IMF at all?
Well, it is true that growth is, it's much improved. It has been tepid. It's much improved. But remember that interest rates are very low globally, and that has a first-order impact on asset pricing. And we believe that those low interest rates are supporting high asset prices. Of course, there are also factors in some countries that are country-specific, like the anticipation of corporate tax cuts in the United States.
Okay, if that's the reason for asset price rise, low interest rates, now the United States is also going to get fiscal stimulus. Is that a likely cocktail that should worry you?
Well, I think what we'll see in the U.S. is more pressure on prices, because pretty much the U.S. is at full employment. That might give rise to faster interest rate increases by the Fed and more appreciation pressure on the dollar. So, to some extent, that might be good news for the rest of the world economy. It says some of that stimulus will be transmitted abroad, but also there is a possibility that the U.S. has a bigger trade deficit as a result.
But you don't think that this combination of low interest rates and high fiscal stimulus or coming stimulus in the U.S. Could precipitate more than desirable asset inflation? Would you want the Federal Reserve, for instance, or other central banks to tighten a little more quickly?
Well, if they see inflation rising more quickly, they will tighten more quickly.
They will tighten when they see price inflation. They don't seem to worry much about asset inflation.
No, they're looking for price inflation, and that's I think what we could get in the U.S. with a fiscal stimulus coming at this point in the business cycle.
No, well, on hindsight, a lot of economists said that the Greenspan era also concentrated on price inflation when it should have worried about asset inflation. Will that charge come again?
This is an ongoing problem, and it reflects the fact that that monetary policy can't do everything. I think Greenspan's regime saw potential growth growing and accommodated that, and that was a positive. But there were also clearly weaknesses in the financial sector, which should have and could have been addressed directly by micro and macro prudential policies. So our view in the fund is that it's very important that regulators use the available policy levers, aggressively when there's a risk of financial instability. But targeting monetary policy at financial stability is a very blunt weapon. We don't know how to calibrate it, and carries risks.
Okay. Well, that argument is frequently raised in India as well. But let me stick with the global economy. What are the red flags at all that you will watch out for in 2018? Something that might likely destabilize markets and economy.
Well, I think we do worry about the increasing levels of global debt that are being, in some cases, fueled by a search for yield, in some cases fueled by just the ease of borrowing terms right now. If, for some reason, interest rates were to rise more quickly than people anticipate, that could cause a financial stability risk. So we're watching those debt levels very carefully, and we are issuing warnings about them.
Okay.
Not clear they're being heeded, but we think that's one threat that does worry us.
Is Bitcoin a worry?
One can see scenarios in which it could become a problem. I mean, if leveraged actors make bets on almost anything,
exactly.
There is a risk. Now, clearly, regulatory policy should prevent systemic institutions from lending to such people, ideally. And that's where, prudential policy comes into the picture.
Well, it's got legitimacy now. Some countries are accepting taxes in Bitcoin, and the mother economy has allowed trading Bitcoin futures. So it is inevitable that financial institutions will take exposures, leveraged exposures to Bitcoin. So
well, we allow people to bet on horse races, right?
Right, yes.
Fintech offers great promise in many areas. It also carries risks in many areas. I think Bitcoin is an area where there is nothing that fundamentally ties down the value of this asset, and that always creates a risk. There's been a lot of interest because it's gone up a lot recently, but that ascent can't clearly continue forever, and when people realize that, we don't know what happens to the value. So, I tend to think that some people are going to make money, some people are going to lose money.
Yeah.
I don't see it as a major threat at this moment.
Okay. Do you think it will kind of take away sheen from gold, because it looks like it will be a hedge against inflation? After all, the base money creation is controlled.
Well, gold has a fundamental value, which is tied down by its industrial use, its use in jewelry. Bitcoin, you can't make a necklace out of Bitcoins. You can't use it,
yes, industrial uses.
Tooth fillings, right? So, it's a different animal.
Well, you're certainly bitten into my fears. Okay, you're not still worried about Bitcoin. Finally, how would you rate inflation? Do you think that crude prices are likely to remain more elevated next year than they are this year?
You mean for crude oil?
Crude oil prices.
I think this is another factor that is clearly important for India.
Yes.
Part of India's growth is owes to improvements in its terms of trade as commodity prices, particularly oil prices, have fallen. So, we see the price of oil as being broadly stable. It has recovered to around $60 a barrel now. If there are sharp movements in either direction, this could change India's outlook materially. But for the moment, we see stability going ahead.
It's not just crude; it's the entire basket of even ferrous and non-ferrous metals that have been elevated, that are much better priced in 2017 than they were in 2016. Purely as an economist and someone who has got a view of where global economy is headed, do you think the commodities upcycle continues in 2018?
Well, the upcycle is driven largely by this cyclical upswing we're having in the global economy. And when I say cyclical, I mean that it is probably temporary relative to the trend growth rate, which is lower. So I don't see a huge amount more upside for these prices. I do see a scenario in which they moderate somewhat. Some of them have gotten quite high, copper. But fundamentally, they're being driven by this recovery. They're being driven by China plays a huge role here, and China, over time is going to slow down as it rebalances. So I see not much chance that we get a huge spike up in commodity prices in the near future.
Okay. Well, now the absolute last question. Is there anything that you would worry about out of China? About 14 months back, we had the worry that there would be a huge yuan devaluation. Any such tremors at all from China?
Well, the situation certainly seems more stable now. Capital outflows have reversed. The government is actually taking some steps to reduce domestic credit growth. We still, on balance, view the Chinese financial markets as being in a risky place, given the levels of domestic credit, the size of the shadow banking sector, the risks there are still very real. But we're not in the sort of crisis moment that I think we were in back in the early part of 2016, when financial markets really were very, very upset about this devaluation possibility.
Okay. Well, thank you very much, Maurice Obstfeld, for speaking with us. There is a lot that you have said that will calm nerves in Indian markets. The fact that commodity upcycle is not going to be too bad next year. The fact that global growth will remain largely steady, that Bitcoin is not such a big worry, and that India doesn't look like a currency manipulator. Thank you very much for joining us in this conversation.